All right. Perfect. All right. Perfect. All right, we're looking better. We're looking better. Okay, good, good. All right. Perfect. All right, we're looking better. We're looking better. Okay, good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Good, good. All right. Let me get some folks up in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in here. Let me get some people up in the Billy. Perfect. A lot of people. All right, we're looking better. We're looking better. Hop on a session with Coach Jay. We're gonna get it in. Okay. All right. Let me get some people up in the Billy. Perfect. Man, there's so many different sounds going on right now. It's pretty wild. That's pretty wild. But we're here. We're doing our thug thizzle. Hopefully everybody can see this. See, you guys can't see this. Perfect. Let me get this set up right here. Let me get this popping. Uh-oh. There we go. Hope that ain't that either. Family. What it do, what it do. It's your boy Jay. Hey, I'm popping in right now. If you guys are actively trading right now, I'm live on my YouTube channel. Y'all go check that out. The link is in the bio. Right? Check me out on my solo.to. You guys will be able to see it. We'll be going over commodities, bonds, stocks, and how to correlate the entire world's markets. I got it for you guys, like I said, live on my YouTube. Just come check it out. I'm live streaming. I'll see y'all there. What it do, it's your boy Jay. Hey, I'm popping in right now. If you guys are actively trading right now, I'm live on my YouTube channel. Go check that out. The link is in the bio. Right? Check me out on my solo.to. You guys will be able to see it. We'll be going over commodities, bonds, stocks, and how to correlate the entire world's markets. I got it for you guys, like I said, live on my YouTube. Just come check it out. I'm live streaming. I'll see y'all there. Hey, what it do, it's your boy Jay. Hey, I'm popping in right now. If you guys are actively trading right now, I'm live on my YouTube channel. Go check that out. The link is in the bio. Right? Check me out on my solo.to. You guys will be able to see it. We'll be going over commodities, bonds, stocks, and how to correlate the entire world's markets. I got it for you guys, like I said, live on my YouTube. Just come check it out. I'm live streaming. I'll see y'all there. Hey, what it do, it's your boy Jay. Hey, I'm popping in right now. If you guys are actively trading right now, get some people in the Billy. Let's see if they're on it. Let's see if they're on it. If they fast enough, they'll make it. The fast ones will make it. My father could have been a great comedian. What it do, it's your boy Jay. Hey, I'm popping in right now. If you guys are actively trading right now, I'm live on my YouTube channel. Go check that out. The link is in the bio. Right? Check me out on my solo.to. You guys will be able to see it. We'll be going over commodities, bonds, stocks, and how to correlate the entire world's markets. I got it for you guys, like I said, live on my YouTube. Just come check it out. I'm live streaming. I'll see y'all there. Hey, what it do, it's your boy Jay. Hey, I'm popping in right now. If you guys are actively trading right now, I'm live on my YouTube channel. Pretty dope, pretty dope, pretty dope. So that works. So that works. Cool. Connection looks excellent. Everything looks great. You are good. One main thing I want to look at, everybody, and the way that I look at these things is based on when we're looking at commodities, bonds, and stocks, they're all going to do something different. It's a little playback in the background because it's live, so I just got to hear myself twice, and that's fine. So they're not all going to do the same thing because they counter correlate. So when you think about it, commodity prices such as cotton, cattle, butter, rice, copper, you know, things that we use and we need on a daily basis. We'll see those prices start to go up first, and those are our economic inflation indicators, right? So if you're wondering if inflation is happening, you should look at commodities first, right? Commodities do their own thing, right? In relation to the dollar, when commodities start to go up, inflation is happening. So you start to see stock prices go down, right? It's so weird hearing myself twice in the background. Okay, so stock prices start to go down. This is your stocks, which you'll see here on the S&P 500, right? When commodities are going up and inflation starts to set in, the dollar's value starts to increase, right? You start to see a rise in interest on the US dollar, which makes it more expensive, right? Which makes the commodities more expensive as well. It never costed more. It never cost more to build a house. The wood still costs the same amount. Paper still costs, to produce, right? It's free. So the value has gone up with interest, and that interest comes with time. Okay, so as commodity prices go up, inflation sets in, and the value and the price of these stocks has to drop in order for it to become more interesting for the public. Okay, so if we come and look at the S&P 500, you see that the price is falling, right? Normal market structure, Dow theory says that a downtrend is comprised of lower lows and lower highs, right? Get Taco Tuesday out here for you guys, so you can see what I'm talking about. Okay, we'll talk about Taco Tuesday in a later session, but it's definitely something to take into account. All right, so we definitely have a downtrend set in. You can see here I had some sort of speed line that I had drawn. But you can see that, the volatility kicked up on the way down. A lot of things, average true range and everything, right? At these climactic action points, right? You can see there's more downward force than upward motion here on this stuff on this chart, right? And this is the S&P 500. These are the um, top businesses in the U.S., right? So if their stocks are dropping, if they're down 20%, with a change of almost over 7.5% over the day, right? You can see that's and everybody's wondering like, oh no, why are stocks going down? If you see the rest of the commodities like copper, right? We'll check copper out. Copper is starting to do something that I like to see, right? As far as starting to change its character in a way. So you can see that there were multiple attempts to try to slow down. And as you can see, there's professional buying here, professional buying here, professional buying here that's more definitive. right? And I do this for my students, right? I've got these indications of where volume and volatility enter the market, which is indicative of professional buying entering or exiting a market. So we're worried about the large operators and how they not manipulate, but really orchestrate the movements of the market. So they stop, turn, and start trends. So, okay. So hopefully you guys can still hear me. Maybe you can, maybe you can't. I might have muted the live for myself, but not so much for you guys. So, hopefully it's still pumping out audio. It still looks like it's pumping out audio on my mic from my side of the platform. So I'm gonna keep going like this so I don't hear myself anymore. Yeah. So I muted that live, but hopefully you guys still hear me. If you could leave it in the chat. I know there's a chat on here. But what we're looking at, right, is copper, right? Copper is a leading indication of a lot of things. In my review of the markets on Sundays and just for overall economic health indication, I look at copper. Copper's in the lights. It's in your car. It's in your phone. It's in everything really, right? So wiring for electrical wiring, like I said, for the lights. You got the lights on right now. You got some copper wiring going through that. So copper is a good indication of building and other things like that. Gold being a risk asset, what's really going on there, right? As you guys can see, this is key to knowing, where the intentions of the market, are. Okay, so if this is what we're seeing here as commodity prices, some of these, um, call these metals, right? Indices of a sort, but more metals on the side of the commodities, the coppers and the golds. Right, we'll see these start to trail off if the dollar is more bullish. If the dollar is bullish as well, we'll also see stock prices going down, and bond yields will be doing the opposite. Commodities, bond stocks. So commodities are going down, bonds will start to go up, and then stock prices should follow the bond yields. So as you guys can see, bond yields, 30-year bond yields in the U.S. are going up. Right, people are trying to find a safe place to put their money, and right now bonds are that place. It's very it's very indicative that bonds are where smart money is moving at the moment. We'll take this and we'll change this. And as you guys can see, we have a very bullish trend character there, right? And we don't see any real signs of slowing down. This is actually a very nice trend character, if you will, from an Elliott wave perspective. So I like to see it. We got 1, 2, 3, 4, and wave 4 stayed out of the break threshold. So that's a very good bullish trend for wave. This is wave 1, 2, and this is 3 to 4. If we were to measure that movement, okay, if we were to measure these two movements, we have two similar movements. So if 1 and 2 are equal, then we would expect wave 5 to extend. Right, wave 5 should be our extension wave. So we may not be seeing, as much as people want to say the crypto market is going to be, bullish sometime soon. I don't think crypto is going to be uh, coming out of that crypto winter anytime soon by how bullish the dollar is, right? And you see people funneling into safer assets, and that's why I'm seeing that, right? Um, this is the Japanese 225, the Nikkei, I think that's what it's called, right? The Nikkei, I can't. I couldn't tell you because I'm not Japanese, but I digress. We've got, a sideways market action here. So we call this consolidation pattern, right? Where it's just moving sideways in between, maximums and minimums. But in the grand scheme here, we do see the Japanese market pretty much holding solid in between a range, and it's right now in the middle. So I wouldn't really call anything there. We got 10-year bonds for the yen, and those are also in a very accumulative, manner. If we call this the selling climax with the automatic reaction here, we've back to the edge of the creek, and if we did call that, then we had an exhaustion, if you will, of sellers. So we got down here, got an exhaustion. We had this real nice pop in the average true range, right? And if this was, indicative of sellers still being here, then they would have pushed back down. But now we can see that we've got rising lows, and our last areas of supply are starting to increase, especially as we break back out above here. So not quite certain if we have enough volume to really break out, but as far as the momentum goes, we are above 50% there. So I mean, 50 as far as where the KND percents are, yeah, 50% KND percent here. So we're on the more bullish track, but we were overbought a little bit at these highs. So looking at the Japanese market from that perspective, that's what we'll see. So 30-year bonds look great, breaking out of that previous resistance. So we'd like to see them pull back and see how that pullback fares. If we can get a reduction in volume on the way down, and we can start to see these candles get a little bit smaller, right? These bars get smaller, and if we can get a breakout above there, right, call that trend change and pivot high, that breakout, then yeah, you could potentially see some more risk off sentiment moves towards those sort of things, right? But we're looking at copper. Copper starting to turn around. Leading indicators, soy, which is in everything, starting to turn around. Gold is, doing what it does, counter correlating with the bullish dollar. And we've got cotton also doing the same sort of thing, right? So nice pullback and a breakdown, right? We've got this structure of distribution there. And they pull back and call this a break of the ice. So we look back to see that sentiment pick back up when we got back there, and that's exactly what we got. Sell stops below here, definitely safe because we got enough going on in the background to let us know that shorting on the cotton side. But as you can see, we are trending sideways in this market. So if it did come back up and start to see some strength, then maybe. But if we can continue to break down, cotton, and we can short some cotton, and that'll relieve some of our as you can see, the stock market's trying to account for the increase in commodity prices that had happened, but now they're distributing, right? So that will give us a what am I looking at? This is on the daily too. So that'll give us you know, as far as the stock market's concerned, a breather, right? They're trying to dump stocks. You see things like Nike is dumping shares to make it a little bit more interesting for the general public to try to accumulate. But no, they're just trying to short um, into all of that, right? So like we were talking about, the dollar's bullish, and if you guys do happen to use the DXY as, let me see if I got it on this, right? If you do use the DXY as an indication, right, as whether the dollar is bullish or not, just be aware that the DXY is heavily weighted on the euro US dollar pairing. So you're getting a lot of euro USD, which the euro does comprise a lot of the foreign exchange market, holding the most uh, close to the dollar, but really holding the most of the open contract, open interest, right, as far as contracts go. Um, And when I say open interest and I say contracts, I mean a buyer plus a seller each equals a contract. So when you have a buyer willing to buy and you have a seller that's willing to sell, they create this written agreement that says, hey, I'll sell it to you for this price and I'll buy it for you from this price, the bid and the ask, right? So if you have something that's heavily weighted on one particular thing, you're looking and focused on one thing. And if the dollar is more bullish than the euro, then of course it will look more bullish than everything else. But here, I've got a formulaic view that, I don't know if I could hide it. But yeah, it's a formulaic view of price and how it is reacting to price of, in particular, the foreign exchange market and the world currency market and the interbank exchange market, right? Where we have the 8 major world currencies, 2, 4, 6, 8. Who do we appreciate? Or right, and that's really what. As funny as that may sound, but that's really what we're looking at, right? Which asset is more interesting at this moment in time, and that's what we are observing at the moment, right? This is the daily perspective of the Kiwi dollar, right, in relation to all the other world currencies, right? Shout out to my firm for giving me that. And shout out to Richard DeMille Wyckoff for giving me the objective lens that I use to filter, my analyses. So you guys are peering into the telescope in which I look through to see if I'm bullish or bearish, and how bullish or how bearish I am on certain markets. And right now we are in I would call this the late Asian session, where we have our lower volatility pairs, the yen, the kiwi, and the Aussie, which if we look at our world clock right now, it is 1 p.m. in Tokyo. Um, New Zealand is 5:47, and 2 o'clock in Australia, 2 p.m. So they're closing out of their days on the trading desks, and it's very low volatility. So there's a lot more program trading going on than actual people trading. So you'll see less volatility at these times, and we kind of capitalize on these moments of taking a breather before we start the European sessions and the London session. Me at the London. If you find time, we could run one. You know what I'm saying? So that's where we'll see a lot more volatility from those style pairs. But while we're in the Kiwis dominant session, you can see we have had a very bullish um, time for the Kiwi, right? Plus 79% over there. Looking at the euro, shorting the euro at the moment because we have what I call the indications of distribution. You guys can check back with me later, but I am shorting the euro. I did short the euro last night and came up very, 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 very profitable on that. And we are still moving a little bit lower back to that 2 to 1. Right. The reasons being are I did note some professional selling start to introduce itself into the market, creating a preliminary supply and a buying climax here. After that buying climax, I do expect them to come retest that, and I wanted to see the volume. The volume was not, um, equivalent to the breakout, right? It didn't match. There was divergence, right? And as you can see, that shows up as a no demand here as on our volume spread analysis indication there. Shout out to Trade Guider and shout out to Maverick Trading, to the places that I use. Primarily, I'm a paid member of both of their platforms as a proprietary trader for Maverick and a very, very happy user of the Trade Guider software for teaching my students, because I also have students of my own. If you guys would like to trade with me, right? I am at Trade First Academy. Right? You guys can come check me out over there, or come hit me up on social media, right? Instagram, and which is where some of you guys viewing this live are seeing me at, right? So you guys can check me out there, and also on this YouTube channel where the stream will be posted. as well as some of my content and videos where you guys can get, some of the principles that I use and the objective lenses that I use. You guys can come back here and rewatch the videos and learn. So I'll drop another video. I think I've dropped 2 other videos prior to this, and that's probably about a couple years ago when we were still wet behind the ears, but very, very, very active in our trading journey, and you guys are seeing what has come to fruition from here. So, not to hold you guys up anymore, this is what we're looking at. This is what I'm doing, right? So we shorted the euro last night, also shorted the pound, and like I told my students, I'm waiting to see a pullback, right? Got some Fibonacci's up, right? We had reached, and I know there was a lot of volatility, but we could definitely see where the intentions were because we have open interest figures that we were looking at, right? Negative 37,000 contracts, right? So that's saying 37,000 contracts were closed over a period, which is why I use this Taco Tuesday because that's where that data is input, right? So if we have a outflux of contracts, that means there's a lack of interest at that moment in time, right? And that's what we're trading that moment, right? So that next Wednesday, right, we could see that outflux of that outpour of energy, that outpour, and then we could see it also in volume that was some intention. Why is there so much volume but no movement? Okay, so they're setting up a move, right? And that ultra high volume demands a retest. So once we got that retest, we got the intention, right? And we could pull a nice Fibonacci or a nice 38 or 20, yeah, 38.2% retracement. And that puts things in perspective for me and lets us know that there is no intention on coming back any higher, right? That rejection, that shallow rejection of that 38% not making it to the 61 or anything else, as we know that we are on a slingshot down to these lower targets, right? And then when we hit that 300%, that is a all stop for me in that trend direction. And lets me know, good shit. Excuse me, if I made 300%, the kiddos too. But uh, if we get down to that 300%, that is a profit taking level for me. If I made 300% profit, I would take that, right? You eat what you kill here. And if I happen to go fishing and I caught 300 fish, I would probably bring them back, right? 300 shrimp, 300 crab, 300 lobster, 300 tuna, 300 of anything that I was hunting, deer, turkey, whatever it may be. That is a good haul. 300-pound tuna. You know what I'm saying? That's good money. That's good eating. Right? Take that. Right? Same thing. That's good eating. Especially when you're coming from 300 below to 300 above, that's 600%. You should probably take some profit off that, and that's what we're seeing, right? Buying climax into an automatic reaction. So I want to see after this automatic reaction, and we're testing the maximums and minimums of this boundary. I want to see them come up to test this and start to drift back down. Once they do that, then I will take a short on the pound back down to these lower maximums and minimums, and we'll be looking for a nice opportunity there, right? Especially after coming from another Tuesday where we could potentially see if the market makers are having the same intentions for us. So here we go. Commitment of traders is what I'm going to use to close out the week. Friday, the Commodities Futures Trading Commission will post the commitment of traders data, and I'll be able to see, what the intentions are, right? Of the large operators and small operators, and see who's doing what and where the intentions of the market is, which is how we came to the conclusions that we came to here on the euro this week, right? So just using little things like that, like the late great, not late, he's still late to the World Cup Trading Championship, Mr. Larry Williams, who won it in 1985, 11,000% using commitment to traders data. Not late, he's still up, still kicking. So let's go check out Larry Williams. He's a great dude. His daughter runs the fund that he traded himself. His daughter now runs that and grosses probably about close to 5 to 7% gain, which is absolutely amazing. Right? And we're talking hundreds of percent over here. You know what I'm saying, in the foreign exchange market. So stock wise, that's amazing, especially in a market that's, as you guys can see, negative 20%, grossing 7%, where everyone else is losing. That makes you a winner. So right? And we're looking over here at the yen as well. You guys saw the yield, the bond yields, and everything else over there, and the dollar, right? Why does the dollar look like it's trailing lower here and not, if you were looking at the euro dollar pair, you'd say that hey, it's super duper bullish, which it was, right? As you guys can see, this crazy kangaroo tail style wick down here, and if we're looking at bars, right? We're looking at bar charts, and you want to be able to read volume in the bar. Look at the closing price, right? You can see early in the session, way back when, on the 11th of August, we had climactic selling that closed all the way at the top, right? Polar bear in Hawaii, that's not indicative of more selling. That's indicative of a lot more buying, right? We said we were in a recession, right? Why August? Because that's the ninth month, right? Months are, you know, our quarters are 3 months at a time, 4 quarters, 12 months. August is month number 9. That's the start of the fourth quarter, right? How do basketball teams open up the fourth quarter, right? Bullish, right? We're trying to score. All right, so that's what we got, right? And now we're at wave 5 of the Elliott wave. We're starting to see an introduction of selling. So it looks like a lot of profit taking there for the US dollar. Now, does that mean it's going to fall and continue to fall? No. Does that mean it's going to go up? No. No. Does it mean it's going to trend sideways? No. We'll see what occurs, right? In the right now perspective, we got today is October 5th. So on the 7th, right, which is Friday, got non-farm payroll. It's the first wake up, wake up, wake up, right? People are getting their paychecks in the U.S. So we'll start to see money disperse, distribute, accumulate. So you guys look for volatility there. Be careful though, right? But I've secured my profits for the week, and I live under the mantra that I'm not going to give back more than half of the gains that I've got, because why would I catch a 300-pound tuna, cut it in half, and throw the rest back in the sea? It doesn't make any sense, right? So just like we talked about here, you see a heavy introduction of sellers after some preliminary supply entered the market. Heavy introduction of sellers, the automatic reaction from buyers, seeing a nice price, back up to the sellers that are playing tennis essentially and pushing price right back down to the buyers and say, hey, it's a nice price, but I know something you don't know. And I see that as of a couple Tuesdays ago, there was a heavy outsurge of contracts on the Swiss franc, which is why I think distribution may be at foot, right? A foot, and that's really what we're looking at there. So maybe not, but we were definitely bullish Swiss last night. It paid off for us, right? CAD, definitely a outflux of orders flowed there. We expect to see the CAD drop a little bit more, and that's what's going on there, right? Trend changing pivot low, the pullback after the trend changing pivot low, the new low, and we are heading lower. All right, higher highs, higher lows. Remember that, guys. So check me out. I want to see us create and push, and if we do create and push, guess who's gonna be there? Because he's got an alert set. I will. Okay, so and then we got the Aussie as well that's starting to change its character from bearish to bullish, right? Preliminary supply, automatic reaction, selling climax, nice little exhaustion test there potentially. If we start to break out above there, guess who will be there for that one as well? I will, because I've got an alert set, I think. Yes, I do. I've got an alert set. So that's how we operate here at Trade First Academy. I'm Jay, the advanced and intermediate operator at the platform. It's crazy, right? 37,000 commercials. I mean, contracts closed, but commercials are not long. You know what I'm saying? So who's buying really? Who's selling really? So if you guys want to interact with these markets the way that I do, as consistently as I do, you guys can go back through my Instagram highlights, and I've been doing this for a while, just like this, professionally and non-professionally in the beginning, but more professionally now. We're managing funds, 1, 2, 3, 4, 5-figure accounts at least, minimum, right? With upwards of 6 to 7 figures, is what we're trading, trying to acquire larger funds, but in time, right? We'll be doing this for the next 50 50 years. So hopefully I'll see you guys over at the platform. Hopefully I'll meet you guys and you guys can meet me. So you guys be easy, take it easy. I'm gonna end the stream on that. So yeah, mahalo. Take it easy. Peace out. I'm Jay.